Welcome to the video on Ichimoku Cloud Trading Strategy. In this series, we will be learning about Ichimoku indicator and application of same across various time frames. So today's video is about Kumo Breakout strategy and how to use the same for short-term trading. So let's get started. So I have explained the rules for Kumo Breakout in the previous part, and for those of you who missed that video, link would come up towards top right end of your screen. I'll also try and keep this video as short as possible as I've already explained the basics of Kumo Breakout in the previous part. I'll just use one chart here to explain all the conditions so that it's easier for you to understand this entire Kumo Breakout method for short-term trading. The chart that I've selected is that of Reliance Industries, as a couple of days back I had tweeted about this as it was forming positive price structure. Let me now show you how you can trade such charts with help of Kumo Breakout method. The first condition to check for Kumo Breakout is to check for volume expansion in the direction of price movement. In all these cases that I've marked here, as price has moved above the Kumo cloud, volume expansion is clearly visible. See, you have to understand that volume actually indicates the commitment of traders in the market. And in all the charts that you select, you have to ensure that volume is expanding in the direction of price movement. In this particular strategy, as price starts moving above the Kumo cloud, which is marked here, clear volume expansion should be visible. The second condition you have to check is whether stock is underperforming or outperforming the broader market index. For this particular thing, we use something called as comparative relative strength line. For seeing this, just divide the price of the stock versus the price of broader market index. In this particular example, I have divided price of Reliance Industries by the price of Nifty 500 index. I have left the code for tradingview.com in the comment section below. So as price is breaking out above the Kumo cloud, you have to ensure that trend of relative strength line is clearly up. Now by trend of relative strength line here, I mean that short-term trend over the next few hours or few sessions should be clearly heading higher. In this first case, if you see, relative strength line actually started moving higher as price was moving above the Kumo cloud. This actually indicated breakout is happening on back of strong outperformance. Now once stock started trading sideways here, in this particular case, stock actually started moving lower, but look at what relative strength line did. RS line was actually completely flat here, and this indicated that it was moving at par with broader market index. In this third case, price again staged a breakout and relative strength line again made a new high here. So the breakout above the price range was happening on back of outperformance of Reliance Industries. So the key message here is to only focus on those charts where relative strength trend is clearly visible on the upside. For long trades, prefer stocks that are outperforming, and for short trades, only prefer those stocks that are underperforming the broader market. Third condition to check for is for trend of Tenkan and Kijun. Now since this is short-term trading, based on how Tenkan and Kijun are constructed, these hold more importance than Senko A and Senko B. Now I have explained this in part 1 and you can watch the same once you finish this video. If price is above the Kumo cloud, it is completely fine for Senko A and Senko B to be relatively flat. However, you have to ensure that as price starts moving higher, trend of Tenkan and Kijun has to be clearly visible on the upside. That is if you're trying to go long in the market. So in this chart, as price moved above the Kumo cloud based on these two candles, look at what Tenkan and Kijun were already doing. Trend of Tenkan and Kijun here was clearly on the upside. Now Senko A and Senko B here were moving lower, and this actually represented trend was not up on this particular time frame. But I'll repeat once more, since this is short-term trading, this is completely fine and you have to only focus on price being above the Kumo cloud and trend of Tenkan and Kijun. The fourth condition you have to check for is of Chikou. When you're trying to trade over short term, make sure Chikou is clearly above or below price. This would actually ensure strong momentum in the market and you would only participate during strong trends. In this chart, as price is moving above the Ichimoku cloud, look at what Chikou is doing. Chikou is already above price and element of momentum is clearly visible. This is usually the cue to trade such charts, as price will more often than not exhibit strong price trends. Now, since you are not holding positions here for a very long time, you have to only focus on Tenkan, Kijun and Chikou and their combination with respect to price. Now, in order to identify high probability setup, you have to ensure that all these 4 conditions meet on every single trade. Let us now come to entry, exit and stop loss. I'm again using the chart of Reliance Industries, and the time frame here is 5-minute time frame chart. So I've marked the entry on the chart where price decisively moves above the Kumo cloud, and both Tenkan and Kijun at this point are clearly trending up. If you look at Chikou here, Chikou is clearly above price and element of momentum is clearly visible. Now in such trades, I will prefer keeping stop loss at the lowest point before the Kumo twist happened. So in this case, Kumo twist actually happened at this particular point. So the lowest low point is marked here, and therefore this becomes my stop loss for the trade. As far as exit is concerned, I would do so in 2 stages. The first exit I would take when Chikou moves below price, and the second exit I would do when price clearly moves below Tenkan and Kijun. Now when you are trading over short term, apart from stop loss and exit, it is absolutely crucial for you to select the right time frame and the right stock to trade. So let me now give out a couple of pointers for the same. So when it comes to short-term trading, the most popular time frame is 5-minute, 10-minute and 15-minute time frame chart. Out of these 3 time frames, Kumo Breakout actually works well on 5-minute and 15-minute time frame. Now if you're someone who trades in stocks, then prefer using 5-minute and 15-minute time frame to go long in the market with this strategy. For short sell trades, prefer using combination of 10-minute or 15-minute time frame. Avoid the 5-minute time frame, that is if you want to short sell stocks. Now as far as stock selection goes, stick with the top 50 stocks based on market capitalization. And within this, opt for only high beta stocks where beta value is clearly greater than 1.2 over the last 90 days. Now what I'll do is I will leave the code for this in the comment section below, that is for tradingview.com website. Now liquidity for us is a prime concern here, and top 50 stocks usually are the most liquid stocks in the market. Now if you want some names of the stocks that perform well with this setup, then do let me know in the comment section and I will get back to you. So kindly consider hitting the like button and sharing this video if you find it useful. Thanks a lot for watching this video guys. Take care and be safe.